Thank you, Paddy, and thanks very much to the MSF for the invitation to present the anchor handling market overview to kick things off this afternoon. My name is Paul Deere. I'm representing Sea Brokers today, one of the leading vessel brokers in the North Sea. We're going to keep it very simple today. We're going to have a few quick slides looking at the drilling rig market first of all. Most of what I will show you today is for Northwest Europe, the region as a whole, as opposed to just the UK, because as Paddy says, the vessels are traded in both sides of the market. But I think when we do look at the rig market, first of all, you need to really differentiate between Norway, first of all, and the rest of the region, because the two markets have been operating in completely different ways. And Norway, first of all, has been the side of the market that's been bringing owners, both on the rig side and the vessel side, some strength into their operations. What we've got here, a couple of charts. We'll do Norway first of all, then the next one will be the rest of the region, excluding Norway. Grey section is total rig supply, so the number of rigs that are available in the market. Dark blue section is the number of rigs that have been on contract historically for the bulk of the chart, and then contracted for the remainder of this year to the very far right-hand side. Light blue is options on current rig contracts, and the red section is tenders that are outstanding in the market for commencement this year. So what we would say is that because this is the strength behind the market, and as Paddy touched on with the political influence on the industry, the Norwegian government, if we think back to COVID times in 2020, they'd offered temporary tax incentives to try and spur more activity, to encourage more field developments on the Norwegian continental shelf. The rationale behind that was that if the field developments were submitted for approval in 2022 and then approved in 2023, then those tax incentives could be capitalised. And the increase to the rig count that we've seen over the last 18 to 24 months, that's those campaigns now coming to fruition. So we've seen increasing rig count in Norway, and the expectation is for that to be continued over the remainder of this decade. The main players in the market, the likes of Equinor, Aker BP, Vår Energi, they're all maintaining very high production targets, and to achieve that is going to require significant exploration and new development campaigns coming into the table to take the place of these campaigns that are undertaken just now. And with that, there is continued strength. Equinor, for one example, they have confirmed that they're planning to drill 250 exploration wells over the next 10 years, which leads us on nicely to the rest of the region. You know, when we talk about Equinor planning to drill 10 wells per year alone on the exploration side, if we think about the UK market, there wasn't a single exploration well spudded over the course of 2025, not one. And now in Norway, we've got one single company drilling at least 10 per year. So while we look at the strength in Norway, comparable side, we look at the rest of the region, and this is primarily UK, a few rigs in Netherlands, but primarily UK, like I say. And in 2025, we saw a real steep decrease to drilling activity in the UK market. That big downturn in the market created very difficult trading conditions, obviously for rig owners, but also as a knock-on effect for vessel owners on the anchor handling side. And it was a very weak market for owners for the majority of last year. Fast forward to where we are today, we've actually seen quite a sharp recovery in the rig count in the UK sector, and the rig count today is higher than it has been for any point in the last 12 months. Look towards the remainder of this year, what we would say is that there is the potential for declining activity. We are still looking at the UK and rest of the Northwest Europe region as being highly seasonal. So while activity levels are relatively high just now in comparison to where we've been in the last 12 months, there is a risk of downside as we move towards autumn and winter and into 2027. What I would say is that if we were to extend that chart beyond the end of this year and look at 2027, 2028, 2029, there is quite a healthy backlog of outstanding demand for rig campaigns in the UK sector. What I would caution that statement with is the reality that quite a high percentage of that is plug and abandonment and decommissioning work as opposed to exploration and production campaigns. Whereas in Norway, the bulk of the demand remains to be that exploration and production work. On that decommissioning side, well, it could be a blessing and a curse for anchor handling owners, where we do have that rig-based plug and abandonment activity for the immediate future. That's going to provide contract opportunities for those anchor handling owners. Then, of course, once that decommissioning work is done, those fields are gone, then that vessel demand has disappeared. And this is quite a depressing slide, unfortunately. This is one that we've been provided by the Westwood Global Energy Group. And it's just a time lapse, essentially, of what could happen in the UK continental shelf if we follow on the current trajectory. So what it does is it shows that in 2025, there were more than 60 production hubs in the UK continental shelf. And based on firm investment plans, by the time we get to 2030, that will then decline. By 2035, we may only have 20 production hubs left. And by 2040, we may only have 4 production hubs left. And that's a pretty daunting proposition for those of us sitting in this room who still intend to be employed in the industry over the next 10 to 15 years. I would stress with that that's a worst case scenario. That's based on firm investment plans that have been confirmed to the market today. I hope and I pray it won't be as bad as that, but it does kind of show the trajectory that we are continuing on as it stands today. One last slide for me in the rig sector. Just a rig demand forecast for the remainder of the decade. Left-hand side again is Norway, right-hand side is UK and the rest of the region. I think quite significantly, I'm going to touch a second on how significantly anchor handling rates have increased this year. But if we look towards 2027, this forecast from Westwood is suggesting that both the Norwegian sector and the UK and the rest of the Northwest Europe market will experience markedly higher rig demand in 2027. But again, I would caveat that with the knowledge that UK, it's a higher proportion of plug and abandonment work again. On to the main point of this afternoon, why we're all here, the anchor handling market. And I highly doubt there is any vessel segment anywhere in the world that will have experienced anything like as much volatility as we have experienced in the North Sea anchor handling market over the last 6 to 9 months. Left-hand side here is average monthly spot rates in the anchor handling sector. Dark blue line represents the larger vessels in the market, which we would class as a vessel with an engine power of 22,000 bhp or more. The light blue line is for the small to medium vessels. Right-hand side is the averages for the year as a whole. So for 2013 to 2025 that are visible there, that's the averages for the entire 12-month period. For 2026, that's the average as of yesterday. The average fixture rate for a large anchor handler in the North Sea is more than £110,000 a day. That's an incredible increase in comparison to previous years. It's more than double the average fixture rates that we've been having for any year over the past decade and beyond. And to really drive home how significant that variation in rates has been, that increase has been, I'm going to use one vessel as an example. And it's a vessel that you'll see quite frequently down in Montrose. We think back historically, last August, it was fixed up for a rig move in the UK sector at £15,000 a day. Fast forward 8 months, and in April, it was fixed up for a rig move in Norway at 4 million krona per day. That's £320,000. So the same vessel, 8 months ago, £15,000 a day. That vessel last month fixed up at £320,000 a day. That's more than a 2,000% rate increase. That's incredible times in the market just now. Why is that the case? Why have rates been increasing so much? Well, one of the main reasons is because we've seen so many vessels leaving the region. We've just got a list here of a dozen vessels. These are vessels that have departed the North Sea over the last 12 months. There are 2 there that are going to be returning from a project in the Black Sea pretty soon. But this is just to drive home that the trend is that more vessels are leaving than are coming into the market. Since the start of 2025, we've seen 7 vessels go to Brazil for long-term contracts with Petrobras. 5 of them are listed here because they left over the last 12 months. We've also seen vessels go into the Med, the Black Sea, West Africa, Canada. Far more vessels leaving than have been coming into the region. But even more significantly than the supply side is the consolidation side. So we've seen a number of mergers and vessel sharing agreements. We've got the likes of C1 Offshore combining their operations with Viking supply ships, DOF acquiring the vast majority of the Maersk supply fleet, and Aurora Offshore combining their operations with CM Offshore. So if we look at the region as a whole, we may have supply of around 50 to 55 anchor handlers. However, once you remove vessels that are engaged on long-term Coast Guard contracts or primarily engaged in other sectors, the spot market this year has primarily had about 20 to 25 vessels on any given day. But it's very, very common now for just 2, 3 or 4 owners to really dominate that market. In fact, this morning I think there were 7 vessels right across Northwest Europe prompt available. 6 of them were owned or operated by the same owner. It's a very, very tough market for charterers at the moment. But having said that, we need to take stock of the bigger picture, not just get seduced by the high rates at the top end of the market. It's not all been plain sailing for owners. And this is just a snapshot of the market as a whole. Again, grey section shows total supply. And it's not just the last 12 to 18 months where we've seen huge reductions to supply. This has been happening for the last 10 plus years. The vessel supply today, in comparison to what we had 10, 12 years ago, we have seen huge reductions in the market. And that's because owners have been chasing lucrative long-term contract opportunities in other parts of the world, while we've been going through quite a difficult period in terms of demand. Because don't be led into a false sense of illusion that this is a demand-led recovery, because it's really not. In fact, March was the lowest level of anchor handling demand in the North Sea that we have seen for any month this century. Yet rates are really, really high. So grey section is total supply, light blue is term anchor handling demand, dark blue is spot anchor handling demand, and we've got a slither of yellow, which is what we class as out of market work, which is vessels not trading in the traditional energy sector. Green section at the bottom is new build vessels being built in European shipyards. Nobody is building an anchor handler in European shipyards. Nobody is building a high-end anchor handler anywhere in the world, and that's because it is cost prohibitive. And that's a concern, because those supply reductions that we have seen, they are structural changes to the market. And the red line is your total utilization. So while anchor handling owners in many cases are getting very, very high rates, achieving sufficient and adequate utilization to turn a decent profit level, that's not so easy. If we think back to that same vessel I spoke about previously, picked up a 4 million krona fixture in Norway, £320,000 a day. But that vessel was only on hire for 4 days. It hasn't worked a day since it came off contract in mid-April. If you then calculate what the average daily earnings were for that vessel since it went on hire for that 4-day job, it's only about £28,000 a day. Would you be surprised if I told you that that work scope is the only work scope that vessel has undertaken this year? We're almost at the end of May, and it's worked for 4 days this year. So while it was earning £320,000 a day while it was on hire, its actual average daily earnings, less than £10,000 a day. So let's not be seduced by the rates at the very top of the market. This is still not entirely plain sailing. And in the grand scheme of things, it's a market which isn't really working for everybody, for anybody. Charterers' rates are way too high. For owners, they're still not achieving the utilization levels that they really require. And that's why many owners are still looking for contract opportunities in other parts of the world. As we stand today, this is now a significant risk period for charterers. With the arrival of the Rosebank FPSO, we've got a list of 8 vessels here that are all allocated work scopes in coordination with the hookup of the FPSO there. And where we already have tight supply, we've already experienced rates of 4 million krona, £300,000. Any charterer with requirements out in the market over the next month or two, you are potentially exposed to very, very high rates. And I would think that any requirements coming in over the next, certainly 4, 5, 6 weeks, you will see many, many offers coming in, £200,000 and above, maybe even higher. Very, very high risk period for charterers for the immediate future. In terms of our rate forecast, this is a very thankless task, as I'm talking about one vessel which experienced a 2,000+% increase to its fixture rate in the space of 8 months. Trying to project your rate forecasts for the next 5, 6 years, that's a tough call. However, given the state of the market and how different things are trading today in comparison with previous years, our projections are that these high rates are here to stay. Now, things may change if we see some owners speculatively mobilize tonnage into the region to try and capitalize on these trading conditions and these high rates. But if that doesn't happen, then the exposure, because there are far fewer owners, far less supply, the exposure for charterers is for a continuation of these high rates going forward. What I would say is that once you get towards the end of that chart and start thinking about 2029, 2030, that's at the point where potentially you start having floating wind requirements having a much bigger impact on the market. Now, I'm a little bit hesitant about showing these charts because what it shows is the number of floating wind turbines that are scheduled to be installed in the future. And the reason I'm hesitant about including these charts is because we used to see a big spike for 2023, and and then 2024, and then 2025 and 2026, and it keeps getting continually pushed to the right. As it stands today, those forecasts are suggesting a big increase to Northwest Europe activity in 2029 or 2030. That may get pushed further to the right, if it happens at all. But if we do have any real faith in the energy transition, any real faith in the floating wind industry at all, then when this happens, we need to make sure that we have anchor handling supply to accommodate and to facilitate the growth of that market. We also need to bear in mind that this is an aging fleet. This is the age profile of all the anchor handlers that are based in the North Sea just now, plotted by their delivery year. And you're looking at a situation where 36 vessels in the market today are more than 15 years of age. The average age of an anchor handler in the North Sea is now creeping up towards 18 years of age. Now, we can quite quickly be too disparaging about vessels when they reach 15, 20 years of age. We've got lots of very, very good owners in the market, good owners in the room, who take good care of their vessels, and there's no reason why they shouldn't continue way beyond that 15-year mark. But we're kind of sleepwalking towards a situation where if we do have faith in the floating wind market, do we have sufficient supply to accommodate that? And just as a theoretical argument, if you were to order a new build anchor handler for delivery in 2028, by the time you accepted delivery of that vessel, 80% of your competition in the North Sea will be more than 15 years of age. So based on the floating wind increase, if you believe in the longevity of the oil and gas industry, it would be quite easy to put forward a theoretical argument, a logical viewpoint for building a new build high-spec anchor handler. However, once you look into the economics, the finances of it, that becomes a much harder proposition. To build a high-end anchor handler in a Norwegian shipyard today, you're probably looking at the guts of 1.7 to 2 billion kroner. That's getting close to a couple of $100 million. That's a very, very tough business call, especially when you see how low the utilization levels have been at some points this year. And just last slide for me today, before I pass on. We were asked by the MSF just to have a quick look at the feasibility of Montrose, maintaining Montrose as a port for anchor handling operations going forward. And this chart just plots the number of spot vessels that have been on hiring in Aberdeen in the red and Montrose in the blue, going back to 2021. And if you look at 2023 there, you had close to 200 spot hires on hiring in Montrose. And what we've done with 2026, we've extrapolated that if the number of fixtures on hiring in Montrose continue for the remainder of the year at the same pace as they have through the first 4 or 5 months of this year, that's how many on hires you will have in Montrose this year. So apologies for leaving in quite a depressing slide, but it does kind of paint a picture of where we are as we stand today. And with that, I'll draw things to a close and pass on.
Excellent, thank you. I think we all need a drink after that one. Are you going to stay up for questions? Paul?
Sorry.
Right, yeah. Just go to the room for any questions. We've got one. Oh, no. Oh, he's come back up now. Someone has to ask that question. I'll ask then. So the new build market for, you're saying in Norway to build, very expensive. Are you hearing anyone building elsewhere?
I mean, there are new build anchor handlers being built, primarily in China.
For China?
Not necessarily for China, but certainly not for the North Sea.
Yeah.
So you're looking at 90-ton bollard pool, 120-ton bollard pool, significantly cheaper than the anchor handlers you would require for the North Sea, but none of those vessels you will ever see in our shores, unfortunately.
Yeah.
So you will get a vessel built cheaper in China, but at the moment, because it is simply so expensive, even in China, nobody is building a high-end anchor handler today.
And just one more, the floating wind market. Have you had any discussions about this sort of contracting strategy for these vessels? You know, are people looking to build for a specific bespoke build for these, or because they're obviously going to be long-term charters for these big gigawatt
At this
fields?
point, no, but I think they are now starting to grasp, now that they're seeing how high rates have been over the last 6, 9, 12 months, a little bit of fear is kicking in.
Yeah.
But the economics of these projects are already quite thin in many cases. And the notion of committing to, even if you had a long-term contract you could offer, to justify a really high-end anchor handler, you're going to have to be looking at a 365 day per year contract, getting close to £100,000 a day maybe. and that's simply not going to happen. But something needs to give at some point, whether it's government intervention, government subsidies, I don't know, but something has to give, because if that floating wind market does expand at the rate that we hope it does for the energy transition, we're not going to have enough anchor handlers to fulfill the work that they require.
Good, thank you. Okay, thanks.